Hello everyone. Yeah, hope you guys are doing great. So in today's video, we'll go through the con call summary of Kalyan Jewellers after their Q3 FY26 results. So let's see what the management is talking about and how they answered certain questions. So in terms of the results, the management said that the revenue increased by around 42% to 10,343 crores compared to the last year. And the PAT was up by almost 103% to 416 crores. And if we divide the revenue and the growth between the geographies, India business grew by around 41% and Pratt grew by around 84%. Middle East business grew by around 28% and their PAT grew by almost 44%. And if you look at their Candere brand, which is for the young people and lightweight jewelry, and it has a more combination of studded mix, their revenue for Q3 increased by almost 144%. So last year, the revenue from that business was around 55 crores, and currently it has increased to almost 135 crores. And the business, this part of the segment has also turned PAT positive. Last year, they made a loss of almost around 7 crores, and this year they made a profit of around 3 to 5 crores. And the other thing, what the management said is because of the high gold prices, which has happened in this year. In Q3, they saw more traction on gold exchange, and they gave a division of the revenue between gold exchange, gold saving scheme, and the sale from the new gold. So the gold exchange contributed to around 32% of the revenue. Gold saving scheme contributed to around revenue to around 18 to 20%, and the remaining was contributed by the sale of a new goal. So the business is generating quite a good cash flow, and the management has said out of that 300 crore would be used for expanding the Candere business, and they also use some amount to open pilot showrooms in US and UK, because we need to understand US and UK is not like India where everyone buys golds where it's roams around, right? So that's why they call it a pilot showroom, where they want to see how the people respond and what is the demand, and accordingly they will take the decision in future. And another 300 crores from the cash flow would be used for debt reduction and dividend payments. So let's get into the questions which were asked to the management and how did they answer. In terms of the regional brand, management clearly said that they will start launching the first regional brand by the end of Q4 FY26. And another interesting question was asked was about LGD. LGD is nothing but lab grown diamonds. So the person asked that there are a lot of jewelry companies which are getting into these lab grown diamonds, are selling it. So what is your view, and are you getting into this business? So what the management said is that they are monitoring this space, but as of now, they do not have any plans to add these lab grown diamonds into their offerings. So they want to continue with the offerings that they have, and they're just monitoring at this point of time. If anything changes in the future, they will announce it. So in terms of margin, the margins improved because the contribution from the studded jewelry segment increased. And because of the change in agreement with the franchisee, the share of franchisee revenue is also improved by around 0.5 to 1%. And there was another question asked that as the prices are increasing of this gold, was there any impact on the studded jewelries? And the management, what the answer that management gave was quite interesting. So what management is saying that they're seeing very good organic growth in this segment. And what is happening? They're able to sell this the studded jewelry more than the normal gold jewelry, because they look bigger than the normal gold jewelry and people like it. And these jewelries also come in 18 karat, and because of which the price is comparatively low, and so they see a quite good demand in this. And going into this 18 karat jewelry, one more thing what they said is like the not non-south market has more demand for 18 karat jewelry, and they are planning, they are increasing their inventory over there. But if we compare to the South Indian market, they are not that 18 karat friendly, because they generally prefer 22 karat or how to say 24 karat gold. But what the management is saying that they are planning, they have already launched these 18 karat jewelries in South Indian market also, but very slowly, because they want to see how people respond to it, and and what is the demand for it. Because They cannot change the mentality of the people directly to buy 18 carat jewelry because they are cheaper, because the South Indian market preference is different. So they want to monitor it, they want to see how it goes, and then accordingly take the decision. In terms of Q4, management has said that they see a good growth. They don't see any challenges as of now. Customer traction has been strong, and the customer walk-ins are also increasing. In terms of per store revenue, the per store revenue in the south is more higher than the per store revenue in the non-south segment. The main reason is why, because most of the south segment stores are Foco store, which is which is Coco, which is company owned and company operated, and the not non-south segment, majority of the stores are franchise owned and company operated. So that's why the revenue per store over there is less. In terms of growth, management said that they will launch five new showrooms in the regional brand, and the capex would be around 4 to 5 crores per store. And in terms of the overall showroom growth plan, they plan to increase their Kalyan showroom numbers to 446 in FY27, Candere showroom number to 223, and international showrooms to 49. So these were the growth plans. So in terms of if we see from the overall con call, the gold prices has not impacted the overall business, and management does not see any future impact also. And they are quite confident, and they are planning to increase their stud, how to say, the stud jewelry share more, because that's where the margin is also more, and concentrate on their Candere business. And on top of that, they are increasing the overall showroom. So there is no issue in terms of growth, and we just have to monitor it. And there was one last question that was asked, which was quite interesting. One of the person asked that why the share prices are going down even when the business is performing well. And I really like the way management answered the question, right? They said that it is not under their control how what the share prices react. All they can do is doing good execution and deliver the numbers. And that's what matters the most. And I think in this we can learn a lesson, right? Because most of us generally, when we look at a business, we look at the chart and we see, oh, the price is going down or the price is going up, and we decide whether the business is good or bad depending upon the chart, not what the actual business is doing. Here, what the management is trying to teach us is like, just look at the business and how the business is delivering. If that goes well, everything will go well. And I think if we change our mentality as a business owner, instead of just looking at the chart, we will also be able to hold good fundamentally growing businesses and not sell them in panic because the prices are going down. Thank you for watching this video. And if you like it, please do subscribe to my channel. God bless.